Good morning to all of you. This is C. Anita Sahu, and this video lecture is related to income from the head salary. The subject is tax planning and management, and subject code is KMB FM02. In this lecture, we are going to discuss the taxability of the salary. Salary here is including salary plus wages. That means there is no difference between salary and wages from the taxation point of view. Now, what is salary? That means how a receipt is treated as salary. Any receipt is treated as salary if the relationship between payer and payee is employer and employee. That means the payment is received from the employer by the employee. If the relationship is not there, that means payer and payee relationship is not employer-employee relationship, then the receipt will be any other receipt but not treated as salary. Only then the amount received will be treated as salary if the relationship is there. Employer may be operating in India or abroad, maybe NRI. The employee may be full-time or part-time, doesn't matter. The important point is that the payment received by an individual from a person other than employer cannot be termed as salary. For example, if any person is suppose associate professor in any college and any amount received as invigilation charges or copy checking charges from the university will not be treated as salary because that person is not the employee of the university. He is employee of particular college and college is under university. But that professor is not directly related to the concerned university. He is not employee of the university. So any amount received by the professor from the university will be treated as income from other source, not the salary. Salary will be taxable on due or receipt basis, whichever is earlier. That means if you are receiving advance salary, then receipt will be earlier and it will be due in the next month, right? In that situation, advance salary will be taxable in the month of receipt, not in the month of due. Now, these are few basic components of the salary. For the purpose of knowing that what are the component of the salary, you have to see the pay slip of particular employee. Normally, these are few components which are common, but sometimes the salary is consolidated one, right? Consolidated salary is given by the employer. So if it is consolidated or it is in the grade system, the basic components are basic salary, allowances, perquisite, and retirement benefit. Basic salary will be common, right? Consolidated salary, there may be part of consolidated salary will be basic and then allowances perquisite. And in case of grade system, it is allowances are the monetary benefits which are given to the employee along with the basic salary. Perquisites are non-monetary benefit. Basically, these are the facilities. These are the amenities, right, given by the employer to the employees. And retirement benefit and contributions are given by the employer at the time of retirement, or if you are leaving that job, then you are getting retirement benefit. For example, receipt of gratuity, provident fund, leave encashment, pension are few examples of retirement benefit. Now, what is basic salary? Basic salary is always taxable. It is the base, and the for the calculation of allowances or perquisite or retirement benefit, the basic salary will be a foundation stone, and the allowances, perquisite, etc. are calculated on the basis of basic salary only. Other bifurcations are not known, and due to this, full consolidated salary is taxable in case of consolidated one, because other bifurcation, what are the allowances, what are the perquisite, are not known in case of consolidated salary. So total salary will be treated as basic salary and fully taxable. In case of grade system, basic will depend upon the date of joining and the grade, right? For example, if a person is joining a company on a grade of 16,000, 2,300 and 38,000, then his basic salary at the point of joining, initial basic salary will be 16,000 per month without any increment. and yearly increment will be 2,300. That means if he completed 1 year of the service, then the increment will be 2,300. And this increment will be continuously done by the company till the basic reaches to the 38,000. After the basic salary is 38,000, then he may be promoted to the next grade. So the calculation of basic salary and allowances in the grade system will depend upon the date of joining, right, and the number of years completed, and the promotion, basically the promotion or the increment. Then you can easily calculate the current basic salary. Now, what are allowances? Allowances is defined as fixed quantity of money given regularly in addition to the salary for meeting specific requirement of the employees. These are in addition to the basic salary, and these are requirement is specific. For example, the allowances is given for education, for medical, or for any other thing like uniform, for tiffin and all. There are so many allowances. As a general rule, all the allowances are to be included in the total income unless specifically exempted. If the allowance is exempted, then it will not be a part of salary. But if it is not exempted, it will be calculated as a part of salary, and then consequently it will be the part of total income. There are three types of allowances basically. First one is fully exempted, second one is fully taxable, and third one is partly taxable and partly exempted. There are number of allowances coming under each category. Like this table will depicting the examples of different category: taxable, fully exempted, partly exempted. Let's see the list. Taxable allowances, fully taxable allowances are, for example, entertainment allowance. Entertainment allowance, if it is received by private employee, then it will be fully taxable. And if it is received by government employee, there is certain deduction which can be received by the government employee. For DNS allowance, that is known as DA, right? DA is fully taxable. DA is basically to cover the inflation, right? DNS allowance is fully taxable in case of private employee as well as government employee. Overtime allowance, fixed medical allowance. Fixed medical allowance means the allowance is given by the employer to cover the medical expenses of the employees, right? And these allowances are given to the employee whether that employee is ill or not. That means, irrespective of illness, irrespective of medical expenditure incurred by the employee, this fixed medical allowance will be given, and this is fully taxable. City compensatory allowance next is city compensatory allowance is basically given for the for covering the extra expenses of the particular city. Some cities are very expensive. Living cost of the city is very expensive. To cover this extra living cost, CCA will be provided. Next is interim amount allowance, servant allowance, project allowance, tiffin, lunch, dinner allowance, any other cash allowance, warden allowance. This list is basically example. There are few more, right? So these are the examples which are covered under taxable, fully taxable category of the allowances. Next is house rent and special allowance. These are partly taxable. That means certain part of the allowances are taxable and certain part is exempted. And fully exempted category, there are certain allowances which are received by the government employee. The allowances received by judges of Supreme Court and High Court, allowances received by the officials of UNO, UNESCO, UNO. Then compensatory allowance to judges, DA and constituency allowance by MLA, MP, MLC, right? So these are the allowances which are fully exempted if received by these type of employees. Now coming to the second category, that example of second category allowances, that is partly exempted and partly taxable. An allowance granted to a person by his employer to meet the expenditure incurred on payment of rent in respect of residential accommodation occupied by him is exempted from the tax to the extent of least of the following three amount. That means if any employee is receiving HRA, house rent allowance, and he is living in the rented premises, then only house rent allowance will be exempted up to certain extent. But if the person is living in his own house, then full HRA will be taxable. That means there is no exemption. Okay. Now how to calculate these exemption? Exemption will be calculated as ABC, right? And least of ABC will be exempted and rest of the HRA will be taxable. Now what is A? A is house rent allowance actually received by the SSE. It can be yearly, it can be monthly, multiplied by 12, right? Total HRA actually received by the SSE from the employer will be A. Then B, excess of rent paid by the SSE over 10% of the salary due to him. That means the SSE is paying rent, okay, and from the rent paid by the SSE, 10% of the salary will be deducted. Now, what will be the meaning of salary? I'll discuss later on. 10% of the salary will be reduced from the rent paid, and the difference amount will be written here as B. An amount equal to 50% of the salary due to SSE, right? If the accommodation, the location of accommodation is in the metro city like Bombay, Calcutta, Madras, and Chennai, Delhi, and Delhi. That means Mumbai, Calcutta, Kolkata, Delhi, and Chennai. Then, if the location is in these cities, then 50% of the salary will be taken, and for rest of the cities, 40% of the salary due will be taken for the calculation of HRA. If the employee is living in his own house, then obviously the full HRA will be taxable. Now, what is the meaning of salary here? Salary means basic plus DA, dearness allowance. But there is one condition for taking DA here in the meaning of salary. It must be part of salary in calculation of retirement benefit as per the terms and condition of employment. It should be form of salary in calculation of retirement benefit plus fixed percentage of commission on sales. If it is so, if it is not there, fixed percentage of commission, then it will be 0 and the salary will be basic plus D. Then I have an example related to HRA. This is very good example. If you solve this, the concept of HRA will be very clear to you, right? Mr. X, who resides in Chennai, gets rupees 3 lakh per annum as a basic salary during the assessment year 2014-15. He received 50,000 per annum as house rent allowance. Rent paid by him is 40,000. Find out the amount which is taxable as HRA for the assessment year 2014-15. For calculation of taxability of HRA, what we do? First, we will pick this HRA, full HRA that is received by the person, 50,000 annual in the number 1. Then 50% of the salary. Why 50%? Because he is living in Chennai. So it is in metro city. So the 50% of the salary will be considered here. 50% of 3 lakh, that is 1,50,000. Then excess of rent paid over 10% of the salary. Rent paid by him is 40,000 and 10% of the salary, that means 10% of 3 lakh, 30,000 will be there. And the difference, the excess is 10,000. So least of 1 to 3 will be allowed as deduction. That means 10,000 will be allowed as deduction, and rest 40,000 that he is receiving 50,000 at HRA, 10,000 will be allowed as deduction. So the rest 40,000 rupee will be taxable HRA and included in the gross salary of that employee. Now next is special allowances to meet personal expenses. Here in this slide we have few examples, right? There are so many other allowances which are received by the employee. You have to refer the particular act for specific allowance. There are certain allowances given to the employee for specific personal purposes, and the amount of exemption is fixed, not depend upon actual expenditure incurred in this regard. That means the person who is getting that allowance may be spending it or not. Actual expenditure is not considered here. So the deduction is fixed irrespective of actual expenditure incurred by the employee. For example, children education allowance. That means for the education of the children of the employee, 100 rupee per month per child will be the exemption limit. Whatever amount you are receiving as children education allowance, the deduction allowed will be 100 rupee per month per child up to maximum 2 child. Right? So total, that means if we are calculating this, then we will get that 100 into 12. That means 1200 rupee per child per annum will be allowed as a deduction up to maximum 3 child. Similarly, if you are getting children hostel allowance, right, to meet the expenditure of hostel for the children, in that situation, the exemption limit deduction will be 300 rupee per month per child up to maximum of 2 child. It means again 300 into 12, that means 3600 annual amount is deducted as exemption, right? And number of child should be, maximum number of child will be 2 only. For transportation allowance, the limit is 1600 per month, right? And in case of handicapped employee, this limit will increase up to 3200 per month. Any allowance granted to an employee working in a transport system, in that situation, the allowance will be 10,000 rupee per month or 70% of the allowance, whichever is lower. In case of tribal area allowance, that means if you are posted in a tribal area and you are getting some allowance, then deduction allowed will be 200 rupee per month. Underground allowance, that means you are working in a mine, right? In that situation, the allowances will be, the deduction, allowed deduction will be 800 rupee per month. Compensatory field area allowance 2600. Compensatory modified field area allowance 1000 rupee per month. Counter insurgency allowance to the member of armed forces 3900 rupee per month. Now what about fully taxable allowances? There are a long number of list of these allowances which are fully taxable for every type of employee, whether he is private employee or he is government employee. For example, dearness allowance. In short, it is known as DA. Dearness allowance is for, you can say it is for as a compensation of change in the price level, that is inflation, mehengai bhatta, okay, for the rise in the prices and the inflation, to cover the inflation. Although it is compensatory allowance against the high prices, full allowance is taxable. There is nothing as deduction. Next is city compensatory allowance. City compensatory allowance is normally given to the employees of big cities, metro cities, which are costly one. Cost of living is very high in that cities. In that situation, if you are getting CCA from the company, full amount is taxable. Nothing is there as deduction. Then tiffin and lunch allowance. It may be possible that some persons, some employees are getting tiffin and lunch allowance. If it is fixed, okay, tiffin facility is there, then the treatment is different. But if you are getting fixed lunch allowance, tiffin allowance, then it will be fully taxable. And if the employee is, it is given to the employee for lunch as a coupon or added as a part of salary. Coupons are there, then the value of the coupon will be added. There are, if coupons are given, then there are certain deductions are there. Okay. Overtime allowance. For when an employee works for extra time, overtime is done by the employee, then obviously he is getting something extra, overtime is there. So overtime allowance is given to the employee for the as extra wages. It is fully taxable as normal salary or wages. Servant allowance, that means if you are getting something from your employer for the salary of the servant you have or attendant you have, then full amount of servant allowance will be taxable. Full tax will be given, will be paid by the employee. Other allowances, there may be other allowances like family allowance, project allowance, marriage allowance, education allowance, holiday allowance. These are, if these are not covered in the specific category, then full amount is taxable. Here education allowance means the for education of your own, that means for the education of employee. If child education is there, then exemption is there. If you are getting education allowance for your own education, for your training, then this fixed education allowance will be taxable. Now this is all for this lecture. In your next lecture, I will discuss the valuation of the perquisite, that is specific part of the salary, what are different perquisites and how the valuation is done by the employee for the taxation purpose. Thank you so much.